This is Mortgage Pros 411. I'm Audery Boycenow with Kevin Casey, and today we are joined by Lauryn Dunn. Lauryn is joining us so that we can celebrate Veterans Day by learning more about VA loans.
That's my favorite thing to talk about.
I know. It is a very, very good topic and very much misunderstood in a lot of places with a lot of people. So a couple things. So number one, you may have noticed bond market's closed today. Why? Oh, right, Veterans Day. So tomorrow and the rest of the week, we have Fed speakers everywhere. If you're wondering what might move the market in the absence of actual data, Fed speakers can do it. We should have on Thursday CPI, and on Friday we should have PPI, but we're not going to. I mean, I can't imagine we're going to. I can't say for certain, but I can almost say for certain. So with no data, it is unlikely that we'll have a Fed cut on December 10th. So we'll see. But in the meantime, thank you to the veterans. Really, thank you to the veterans for everything that you do every day, what you've done in the past, what you will have to do in the future. We're so grateful.
Absolutely.
Nothing.
All right, moving right along.
No, I think the appropriate thing to do today is talk about veteran VA loans. So,
well, I knew you agreed. Otherwise, you would have shut this idea down. So I knew you agreed. I couldn't imagine you didn't have something to say. All right. So just a little reminder, it being November, whatever it is, 11th. Can you freaking believe that? Renew your NMLS, kids, and make sure you've got your continuing ed done. Make sure you've gone on to the website to see if you need to update your credit report, your background check, your fingerprints, any of those things. Don't wait.
Don't wait. Are you saying that everybody didn't just renew on November 1st, the day that everybody could renew? I mean, I thought everyone stood there and waited for that day.
That would be correct. Did you renew that day?
I have not yet.
I just finished everything lined up
last night. I just have to pay.
You have to pay. Would you just say, Lauryn?
I just finished my C's last night. I'm very proud of myself. It's before December 31st.
Good.
Okay. No, we know because we've talked about this quite a bit lately, that if you wait till December 31st, you can't do loans on January 1st. So please, God, don't do that. Don't do that. And we also talked about the fact that in other states, the dates are different. So, I mean, in some places, I mean, you had to have your stuff done in Georgia, October 31st. November 1st in DC. And I mean, it's crazy across the country. They're not all the same. So just remember. And also, I keep getting people calling me going, hey, we want to do live NMLS, but I can't get a grip on how many people still haven't done their NMLS and want to do live and whether we'd have enough for a live class. So I don't know. What do you think? Is everyone done for the most part?
I've only had 3 people come up to me and ask me personally. So if you had another 12 or so come up to you, then we have enough for a class. But
oh yeah,
then we have to get them all in the same room together.
I know exactly. That's the tricky part for sure. Definitely. Yeah. So here we are. We are on day 41 of the government shutdown. We know that the Senate passed a bill to end the shutdown the other night. Now it goes to the House and then it needs to be signed by the president. So we'll see what happens this week. You never know with the House what they might do. And then it has to move through that whole process. So fingers crossed, because it looks like it's getting hairier and hairier at the airports. I have a friend who flew round trip from LAX to New Orleans this weekend, had no problems. And then I have another person who, I mean, what they've experienced is insane. So it just depends on where you are, where you're going, how important it is.
I had a cousin in Ireland whose flight was delayed in the United States because it was coming from like Boston to Dublin and then on to Liverpool, I think is where he was going. And he couldn't make his flight, even though he's not in the United States at all. But because of the the incoming flight never arrived. So therefore he couldn't make his flight and was delayed a whole day in arriving.
Yikes. Yeah, my husband was driving on the tarmac yesterday and they called a 2-hour flight delay. Like that's how close he was to taking off. I have flights tomorrow, so say a prayer for me.
I know. Wow. Okay, so before we dive into the VA aspect of things, just a few bits. MBA mortgage applications, I have found them very interesting this year. I really didn't pay much attention before. Okay, so purchases, and they're issued every week by MBA. So purchases were down 1% week over week, but they're up 26% year over year. These are really important numbers to be looking at. Refis were down 3% week over week as the rates were kind of like bouncing all over the place, but they're up 151% year over year. So you have to ask yourself, for all those people who are waiting for the market to correct and fix their businesses, are your businesses reflecting these numbers? And if not, then maybe there's more that you could be doing to get yourself out there and go find more borrowers. Thoughts?
Agreed.
Yeah. Yeah. Okay. So again, we have a next Fed meeting on December 10th, but again, absent data, we probably won't get a decrease in the Fed funds rate. We all know that Fed funds does not necessarily correlate with the direction of mortgage rates, and that there's a lot of misperception out there, both with realtors and with borrowers. So this is something you can continue to educate people on.
And
There
the
was
press, just throwing that in there too.
Yeah, that's a great point, actually. So there was a whole lot more, but there were two other things before we get into VA, and I don't want to run out of time on that. So Fannie Mae has now decided that they do not have a minimum credit score. This is for files that are originated after November 16th, on or after November 16th, so not quite yet, but almost. I find this really interesting. It will be very fascinating to see if Freddie, VA, FHA follows. Well, I guess Fannie or FHA doesn't really have a credit score either. Well, they do, but they don't. You know what I mean? So anyway,
I
interesting.
think it's a good idea because if you're 30% loan to value and you got tons of income and tons of money in the bank, who cares if you had like some issue that popped up in your life that, maybe you had a medical issue and you were in the hospital for 4 weeks and something, you couldn't make your payments and destroyed your credit. I mean, you'd have to be longer than 4 weeks, but stuff happens in people's lives, and sometimes the credit score doesn't always reflect that, hey, that perfect credit beforehand, and then this issue happened, and then they should be able to get a loan to help them get out of the situation.
I think the impact will be more minimal than the social media and the media is making it out to be. I think
Yes.
the sliver of borrowers who that will actually help or impact is going to be pretty small. But I am thankful because it's making my phone ring. So thank you, Fanny, for marketing for us.
Well, for those of us who actually remember when we didn't have credit scores, there there were so many borrowers who would have a perfect credit history forever, but one Sears late or something like that. We all knew everyone had a Sears late who had a Sears card because they were notorious for having incorrect information. So, or you have perfect credit except for this gas card that you've had for 50 years, but you pulled it out one day, used it, and then never got a bill because it didn't.
Yep.
And now all of a sudden your credit score has plunged 100 points. So it'll be very interesting to see if this does anything. But I have been a strong proponent of credit scores do not tell the whole story.
No.
The data collectors love to pretend they do, but I turned so many people away for loans before the meltdown, like 800 credit scores. And I would say, you have an 800 credit score, but $125,000 in revolving debt. Maybe you should go attend to that first. You know what I mean?
That's
They qualified for a loan. They could have gotten a loan from me. So some of them listened and some of them just went down the road and some schmo did their loan for them anyway. And then they lost everything later. So I think it's, I, yeah, the credit score thing I've always been not all in because I get this feeling in the pit of my stomach. Should I loan the money? Will they repay it? What's their deal? And it's not always correlated to their credit score.
Agreed. And that's
Nope.
one of the reasons I love the VA loan so much is because most people don't know there is no minimum credit score on VA. And it's more of a situational and a common sense thing, right? Now, a lot of lenders have that overlay where the lenders will have a minimum score, but when you can find one that doesn't and follows the VA guides, does that mean everyone with a 480 gets a VA loan? No, but they look at the whole common sense situation. And if it makes sense and favors the veteran, then oftentimes we can do it.
How do you find which lenders don't have the overlays?
So I go direct to Ginny with my company. So I'm with Rate, so we don't have those overlays. It's in the broker or correspondent world, then sure, you've got to just do the research with your investors to find the ones that are going to work with you on those files.
You know, Kevin, old school, dial for dollars.
Yeah. No, I know. Yeah, dollar for dollars. I wanted to say something else that's been making my phones ring this week, and that is the 50-year mortgage.
God.
I wanted to get your thoughts on it. I had my thoughts on it.
Okay, well, there was a great post. There have been many great posts about this, and it's been a little shocking to see what the response is because there are lenders who are like, "Yeah, this is a great idea. You could save a couple $100 a month." Like there was one, I very rarely engage on social media because I don't have any desire to get in a fight with someone or like try to defend a position that some ding dong isn't going to get anyway. So mostly I abstain. But the other day there was this guy and he's very prominent on social media, and he said, what are your thoughts, and so I said, well, anyone who just does the math knows that it's a terrible idea or something to that effect. And then he said, but you could save $200 a month on your payment. I'm like, are you, like, I stopped responding at that point because I'm like, okay, he's just a ding dong. Okay, so here is some examples. This guy posted on LinkedIn, Chris Bernstein, to give credit where credit's due. On a $600,000 loan at 6.25, on a 15-year mortgage, you would pay $326,000 in interest. On a 30-year mortgage, you'd pay $729,000 in interest. On a 50-year mortgage, you'd pay $1.36 million in interest. So, enough said. Like, what else do we need to know? And again, if you're going to save someone $200 a month in interest, in payment, but extend their term and their payments for 20 years, again, the math doesn't work. But I would like to say one thing. We have to give them credit for having an idea. Seriously. Like, at least they're trying to think of something. Now, should they be vetting this behind closed doors with a group of us who actually have some experience on the ground, who could probably shut this down pretty quickly and not have it be a, public relations debacle? That might be smart, but
Yeah.
trying to think of something different. I'll give them that.
Well, I did the math myself. I was like, wait a minute, let's see how this pans out. I did on a $500,000 loan, I ran at 6%, 30-year fix. And it's like, okay, the payment's just around $3,000 a month. And then I did it on a 50-year term, but I said at first, if I kept the rate the same, okay, they saved almost $300 a month, which was like, yeah, that might, make someone qualify that didn't qualify before. Okay. But the reality is, who's going to lend me money for 50 years at the same rate they would lend me money at 30 years? The rate's got to be higher.
Got to be higher.
Yeah. And once you put that into the effect, wait a minute, the savings just disappears.
Yeah.
I guess I can be of the dissenting opinion just for fun. Is it better than renting, right? If you have someone who wouldn't otherwise qualify and couldn't get into homeownership without it, that's a thought. And also, no one will have that loan. No one keeps a loan for 10 years these days. Very, very rare, right? So obviously you're prepaying that interest heavily, heavily up front. I'm actually in agreement. I don't think that the numbers make sense, but there are going to be people that it will help if it goes through.
Okay, I'd like you to find them and bring them on the show. Let's see how that goes. And I get what you're saying. I mean, if we can get them into a house that may appreciate over time, then maybe it makes sense. But I think that the math is so atrocious that there are probably 15 other ways that we could qualify them for the same thing without having to put them into a 50-year loan that, to Kevin's point, I think is absolutely dead on, which is that rate is not going to be lower because the 40-year, where'd Kevin go? The 40-year rates are higher than the 30-year rates. So
yeah,
I think but again, we have to have ideas, and we have to have thought outside of the box. So I'm going to appreciate that. And there you go. So
yeah, I definitely agree. I don't think the numbers are there, but I like the idea. I like that we're doing something to help with, the affordability of housing and all of that.
they're trying. They're trying.
They're trying.
So, okay, so let's assume that Kevin's still alive and he will be back at some point. But let's take, and then when he does, just so you know, he's going to ask you questions that I'm going to ask you now that you're going to have already answered. So forward to that.
I'll just give him a wrong answer.
Oh my gosh. Okay, sounds good. Here we go. VA loans. We're going to start at the very beginning because there are people who have not ever done a VA loan ever. So, oh, thank God he's back. So that Kevin, I just told her that that I was going to ask her questions now. She was going to answer them. And then as soon as you came back, you would ask the same questions and not know they had already been answered. So now we can skip
You
all
want me
that.
to just tell her the same thing all over again?
Right.
All right. And just for the record, I had to be super creative here. You are on my iPhone because I don't know what's going on my desktop, but it disappeared. And for a while there, I thought it was you guys disappeared. And I was just talking to everybody all by myself. And then all of a sudden I was, so that was a fun experience.
Yeah. Okay. So talk to us. Let's start with what is a VA loan? What makes it different? Tell us about VA loans just in general.
Sure. So VA loan 101, and I understand the average loan officer closes between 0 and 3 VA loans every year, right? So it may not be something that you run into, and it may be something that you want to run into more, right? Which we may talk about that. So 0 down, right? Assuming that the veteran met the qualifications to be eligible for the VA loan and have the entitlement. 0 down when they have full entitlement and don't already own a house on their VA loan. No mortgage insurance. The interest rates are always lower. They're usually very similar to FHA. More flexible underwriting. They're actually more flexible in almost every situation. Underwriting, appraisal value, waivers, condos, they're much more flexible than FHA. So one of the things I really like to say is don't FHA my VA because they're very, very different. Don't confuse the two. Don't let your agents confuse the two.
Okay.
Like that.
Somebody is a veteran and we ask that question now on every 1003. There is have you served in the military? So this is not something that should come out of left field at the end of a transaction. It should have been asked and answered in the beginning.
Well, let me stop you right there. Do all your borrowers fill out the 1003 correctly?
Well, that's my point though. We
Yeah.
know what it should say. We know that we need to be vetting that up front. Everyone who listens to this regularly knows that I'm a big proponent of do not assume they're reading anything. And
Right.
yes, so in my world, I would have that conversation with them, regardless of whether they have filled it out online or whether I was doing it with them. So
Agreed.
yes, double
Yeah.
check people. That's the point. Definitely. Okay, so somebody is eligible, right? And then what happens? Talk us through what you do on a VA loan that might be different than we would do on a conventional or FHA loan.
Sure. So yes, we asked the verbal question up front, are you a veteran? Because I've had people who aren't veterans mark that they served to just go through clicking buttons, right? And then do you think that everyone who served is eligible for the VA loan? No, right? So maybe you didn't do the length of time. Maybe you weren't honorably or other than honorably discharged. There's all sorts of reasons why someone can have served and actually not be eligible for the VA loan. So I don't issue a pre-approval and I don't let my people go shopping or write offers if I don't have their VA certificate of eligibility. And I can hammer that over and over and over again. And that's one of the main reasons I get rescue loan phone calls. Hey, I was with a big online lender that lets people think they're the VA and they just denied me and I'm supposed to move in a week, or they just told me I need a $20,000 down payment and I don't have $20,000. A lot of these issues stem from them not pulling the COE. Again, that's the certificate of eligibility at pre-approval. Don't let your underwriting teams do it. Don't let your processing teams do it. Do it yourself. If you don't have access to WebLGY, make sure that you get it from your team as a part of your pre-approval because not everyone who served is eligible. Huge, huge, huge mistake there. Maybe they have an old foreclosure on their VA entitlement from 2009 and that's triggering them needing a down payment. And we can go into those calculations at some point if you guys want. But that's a huge disservice to the veteran. My LOS pulls it automatically. I don't know if yours does. We still are like in the dinosaur age, so we use Encompass. It will pull it automatically for us, but I like to go on and do it myself. So once you have the COE, and then obviously you're doing your income calcs and all that stuff to get the rest of the pre-approval done, just remember the VA is very flexible and the VA does not have a minimum credit score. I was terrified of manual underwrites when I started in the business before I got really heavily into VA loans. And my broker would just tell me like, hey, if it's a refer eligible, then, or it's, a refer ineligible, then we just can't do it. And like, what a missed opportunity to help someone who is really in need of housing, right? So make sure that you know your manual underwriting guidelines so that you can, I do manuals all the time and I think they're really easy because I know what we need to do, right? So make sure you have that knowledge and then taking some of the certifications that my different programs offer is a great way to have that knowledge base if you don't have it already. So make sure you're doing all those things before you send somebody shopping.
So the other thing too is you really do need to have an understanding of VA loans because there are little quirks to VA that aren't going to apply to other loans. So I am going to read a comment that one of our previous guests had posted online about VA loans. Agents, if you're taking pre-approvals from an organization called, I'm just going to say it, Veterans United, you need to stop, just had to deny another veteran. Veterans United issued a pre-approval for a veteran who is not married. Use the co-borrower income as on 100% financing when you're not allowed to do that. It's a joint loan, which requires a 15% down payment. So that's something you wouldn't necessarily know off the top of your head unless you had taken a dive into VA loans and knew that there were, these kinds of quirks existed. So why don't you walk us through some of the
Yeah,
things that we should.
for sure. And we can give a shout out to my buddy Rick Betancourt on that post. He's a great advocate for VA loans as well. He's off in near Boston. So
Yeah.
so a joint loan. So when you have a veteran married to a non-veteran, that's a regular VA loan, no issues there. You can have a vet couple, no issues there. A joint loan is when you have a veteran and a non-spouse non-veteran. So usually we see that when it's, maybe a parent that's moving in that's not a veteran, or a girlfriend or boyfriend, right? The significant other and who's not a veteran and they're not married. And like, well, hey, I want to use my significant other's income on the loan. Well, okay, that's fine, but you're not married. So we see a lot of courthouse weddings, right? Go get married and then you can qualify for the zero down. Or, look at another loan product, right? If they don't want to get married or they can't get married, and they only have 3 or 5% down, you're going to compare all the loan products and say, educate and say, what's the best decision for your situation, right? Or you're going to do, it's usually 12.5 to like 14.286% down for a joint loan, depending on if there's a funding fee or not. So easier to say about 15% down. And I've had clients that are fine and they do that, no problem, to use the VA. So that's just one example of like, if you don't know your craft and you send a boyfriend and girlfriend shopping for homes and then boom, suddenly now you need 15% down. And there are extra guidelines on a joint loan that you'll need to be aware of. Like the veteran has to qualify DTI or residual income wise for their half of the payment, things like that. So you can't have a veteran making $500 a month and a parent or a, significant other making 10,000 and the veteran has to qualify for their half of the payment. So don't get yourself stuck in those things. And there are some other things. I mean, these, like I said, it's not like FHA, it's not like conventional. There's a lot of, again, very flexible things, and there's also some funky things. So one of the other things that we run into a lot is an immediately departing residence. What is an immediately departing residence, right? Most loan programs have no guidelines on how long it's been a departing residence for before you can use rental income to offset. For VA, if I live in house A and I'm going to rent it out and buy house B, I can use 100% of the rents, not 75%, 100% of the rents to offset the PITI. Not excess for qualifying income, but I can offset up to 100%, right? But let's say I moved out 9 months ago. I may or may not have a tax filing on that Schedule E. I can't offset. You can only, if it's not an immediately departing, you can only offset after you have 2 tax filings and 24 months. So it can be a year and a half on taxes, but you have 24 months of rental history, right? So that's, we can get into a conversation about wealth building and multi-units, and there's some excellent things we can do for our veterans when it comes to that. But that's one of those things people don't realize. Hey, I rented this house out a year ago and I've been renting in the meantime. I'm ready to buy my next one. I have 1 tax filing on this. If they don't qualify without offsetting that PITI from that original house, then they're going to have to wait till they have another tax filing. Luckily, VA is flexible with DTI and residual, so sometimes they can qualify with the high DTI if you have the residual. So hopefully that's not clear as mud to everybody. That's a little higher level with the VA stuff, but just some examples of like, know your craft, right? If you're going to help a veteran, and I have tons of people who are like, I love helping veterans, especially on Veterans Day. I do VA loans, but if you haven't done your training and know your craft, like, please don't be out there marketing this stuff. Like, do your training first.
Yeah, 100%. So if somebody is moving out of their house immediately, do you take market rents or do you take whatever the lease says? Do you
You
have
take market, yep, you can do market rents for it. So you don't have to have a lease agreement or a deposit check. Now, be careful with your investor overlays on that. But usually we'll like pull either estimated rents or a property manager or, kind of a BPO broker, price opinion for rents. Or we take the HUD whatever that's called. There's like a HUD link that you can go to get estimated rents, and then we'll add a certain percentage to it. The only times I've had trouble using estimated rents is when it's like a property in like the boondocks, like in your uncle's cousin's boondocks, and there's just nothing around it to be like to find. There's no comparable rentals, So be careful on those really, really extra rural, extra unique properties.
Okay. Let's talk about residual income for a moment. Explain how that works. We had actually floated it a few years ago as an idea for conventional loans. Like, why aren't we doing that? Because somebody who has $1 zillion a month extra, why are we looking at DTI so much? So talk to us about how VA approaches residual income.
For sure. So VA does not have a DTI maximum or minimum, right? So again, your lenders may, but VA does not. But they do look much more closely at the residual. So we all know what DTI is, but residual is a much more common sense. You'll hear me use that phrase a lot with VA loans, a common sense, and it has to do with the income that the veteran has left over each month. It's like their discretionary income. So it takes into account child care. So make sure you're asking that question up front. If that's not on the application and they pay $1,000 a month in childcare and we see it on their bank statements, that's going to cause you some major issues. So childcare, estimated utilities, and also the deductions on their paychecks, right? So we use their gross income and then we plug in the tax deductions, and then it kicks out a number. So I've had 65%, even sometimes up to 70% DTI that are pass on the residual because the VA cares more about the residual. And again, check your lender overlays. As an aside, not that we recommend someone spends 70% of their gross income on their mortgage payment, but maybe there is a significant other whose income we're not counting. Maybe they have a second job, whatever, like use your brain on that, use the common sense that, if that DTI, and even in some cases, residual is not an accurate picture of what their monthly inflow and outflow is.
So a lot of veterans do not take the zero down option. They actually, there's a fairly large percentage of veterans who do have a down payment. Walk us through how it works with veterans who are choosing to use that program and how the funding fee and disability where you don't have one, et cetera. Talk us through all that.
Sure.
They still actually be a benefit for a veteran.
Yeah, so I am a big proponent that the VA loan's the best loan type to use 99% of the time, right? But there are cases where, sorry, my eyelash is itching because that's normal. There are cases where they have a large down payment and you want to have them compare and contrast loan types. So one example I used earlier was the joint loans that we talked about. But let's say you have someone with 20 or 50% down, is the VA loan still best for them? If they have at least a 10% disability rating through the VA, they're exempt from the funding fee, the VA loan is still going to be the best. It's going to have lower interest rates, right? So you may be at 5.75 on VA, you may be at 6.5 on conventional. Like if that's the only comparison, like why would you go with a rate that's higher, right? VA is usually a half to sometimes even a full percent lower than conventional, just depending on what the market's doing. So, but that's one thing that you want to educate the clients on. Say, here's your options. Here's your VA. Here's the payment. And here's the closing cost, here is the conventional, here's the FHA, whatever the case may be. Now, if they do not have a disability rating through the VA and they are paying a funding fee, there's a funding fee chart, right? So depending on the down payment, it can be anywhere from 1.25% up to 3.3 or 3.6% for the subsequent use. So that gets rolled into their loan amount. And so if somebody has a 3.3% subsequent use funding fee, that can be tens of thousands of dollars. So again, you just want to give them the options and educate them and give them the comparison and then let them choose which loan product works best for them in that situation. Most of the time VA will still look best, but you have $1 million loan and it's a 3.3% funding fee. Maybe the higher rate is, just see what that does to the payment.
So speaking of $1 million loan amounts on VA, talk about loan limits for VA.
Good question. So there are no loan limits on VA when the veteran has full entitlement. Full entitlement meaning there are no loans currently recorded on their VA. There's no departing residence that has a VA loan on it. There's no old foreclosures. When you pull their COE, which you're doing at pre-approval, there's nothing on there, right? So when they have full entitlement, there's no loan limit. They can qualify for a $3 million loan with zero down, assuming they qualify with their income and assets and credit, and also check your lender overlays. I think the largest loan the VA has on the books right now is in the 5 millions. It's 5 point something million. I think that's on the East Coast. So it can be done. Now, the what to know is the entitlement calculations. If you pull their COE and they do have a house listed on their certificate of eligibility that they're not doing a concurrent close on or selling before they buy the next one, now you have a calculation to do, right? And now they may have a down payment. They will have a 0 down max, right? So we talked about full entitlement when there's no homes on the VA loan. If they have partial entitlement, it's up to us to find out how much that partial entitlement is. So they will have a 0 down max. Let's say it's for $450,000. It's not a max on what they can borrow or use on the VA loan. It's just their max. It's 0 down. So if they want to buy a house that's 550, well, what do? Do they have to, they have to bring in a down payment, and it's equal to 25% of the difference because it's replacing the 25% VA guarantee. Right. So in that situation, if their 0 down max is 450 and they want to buy a house that's 550, they have a $25,000 down payment. So when you're working with partial entitlement, you want to see, again, what works best for the veteran. Okay, so here's the down payment needed if you went VA. Here's the down payment needed if you went FHA or conventional. Here's the estimates, what works best for you in this situation. How much in assets you have available to you, et cetera, et cetera.
So let's talk about this partial entitlement thing for a minute. So as far as calculating what their entitlement would be had they either had, talk us through how that works exactly.
Yeah. So the calculation, and we can maybe put this in the chat or send it out later, but it's you take the county loan limit for a single unit. So if they're even if they're buying a multi-unit, you take the single unit county loan limit, and we can just use the standard one. What's 806,500? I know it just went up, but so you take 806,500 and you divide it by 4, and you subtract the entitlement that they've used. Okay, what is the entitlement that they've used? I'm so glad you asked. It's on the COE. So you're pulling the COE at pre-approval, right? So let's just say it's 36,000 because it's a low loan amount or they've had it for a long time or whatever, which it can easily be way higher than that. So you take the county loan limit divided by 4, subtract the current entitlement used, and then multiply it by 4. That's just the way they do it. That's your 0 down max.
Wow.
Okay, I can do it on a napkin, right? Maybe not in my head, but I can do it on a napkin. So county loan limit, which the high cost counties is great. I'm down here in Central Coast of California, and it's 937,150, I think. Right. So divide it by 4, subtract out the entitlement used, and multiply it by 4, and that's the 0 down max.
All right. So that's simpler than I was thinking it was.
Yeah.
Which is great.
Not too bad.
One of the things you do also have to remember is to make sure you're looking at the county limits for FHA, because you can get caught.
Well, it's off of the conforming county loan limits. So, and they go up every year, right? So that means the 0 down max goes up every year a little bit.
Yeah.
Sorry, most years. Every year in like recent history. Yeah.
Yeah, I don't, we've talked about this before. Since they added the LLPAs for high balance, I just do jumbo and baby conforming basically. And so I have lost track of where those numbers are. Like, yeah. And by the way, they haven't gone up officially yet with Fannie. That'll happen sometime around Thanksgiving. We used to do this little contest every year called Crystal Ball competition to guess what the new loan limits would be. And now I think it was September this year that someone preempted and tried to guess what the new limit would be, and then everyone has to follow suit. So I just find
That's fun.
Well,
Well, they're not projected to go up as much as I thought they were, so I would have lost that contest.
Well, this year, because we haven't had huge appreciation, so they're probably not going to go up much.
Right.
No.
I mean, so we'll see.
Yeah.
I don't really, at this point, it just doesn't feel like it affects me. I don't know if everyone else is feeling excited when the new loan limits are published, but I just am not seeing the impact.
Well, I don't get excited because VA loans don't have a loan limit. There's no such thing as a jumbo VA loan or a high balance. Now you might get pricing hits for it, but
Exactly. Okay, so let's talk about Tidewater and appraisals. So the appraisal process is slightly different, and I think it's funny because when I started in this business, you had to go through the VA portal to order a VA loan, and I hated it. And you couldn't, like I didn't have control over the appraiser and all these things that ended up being our very normal life as far as every conventional loan now. So I think so they changed the VA appraisals a few years ago, and it's gotten much better. So tell us about how that works now and how that is helping veterans.
Yeah, so the VA appraisal process is, I think, in some ways, the best appraisal process out there. It's the most flexible. So this is very important for you to know as an LO, and it's almost even more important for you to train your agents about, right? So you have two ways to influence value, and it's not just a Hail Mary, like hope that this appraiser is having a good day and they take my reasoning, like with other loan types, right? So you have, first of all, if you have a low appraisal, which by the way, VA appraisals come in at or above value more often than conventional. Statistically, nationwide, the VA publishes those stats. But if you do have a low appraisal, first you have reconsideration of value, or ROV.
Mhm.
That's the ability to go, no, I'm sorry. First you have Tidewater. So that's where you don't have the report yet. So you don't know what the value is and you don't know what the comps are. But the appraiser is basically like saying, hey, I need some help here. I'm having trouble to come to contract price and maybe there's some data I'm missing. So like help me out. So I always tell my agents, this is your time to shine. Now we have 48 hours to turn in comps and reasoning for the value. I always give my agents 24 and I help them write letters and I help them look at things and whatever, but maybe there's an off-market deal or a cash deal or something that the appraiser is not seeing. I had one come in for Tidewater and we actually got issued over contract price and it was literally an issue of it was a very small rural town. So there was no appraiser that was like right in that area like at all. And it was literally an issue of like, what side of the train tracks is the house on? And he just didn't understand. So being able to explain that, you have such a great line to the appraiser. They're not being jerks about it. By the way, all your VA appraisers they appraise conventional as well. And they have to, I think, for 5 years before they can try to get on the VA panel. So they're not some like big bad, guru or whatever out there. They're other appraisers. So it gives you the ability to talk to them and make a good case for the value. Now, if it still comes in low when you get the actual report, now you know how low it is, and now you know what the comps are. You talk to the agents, talk to the clients, maybe they negotiate and renegotiate and you're fine and you move on. But that's when you have the ability for the ROV, the reconsideration of value. And that's the ability to go over the appraiser's head and go straight to the VA and make the case directly to the VA RLC, the Regional Loan Center, what the value is. And I'm very successful with those. My joke is that I help the veteran write a long enough letter that they just don't want to read it and they're like, value. So not always the case, but but that's where you write the letter from the veteran or the veteran writes the letter, maybe you help them, and then you send that with comps and reasoning to the VA. And then the VA makes that determination. So when I'm talking to an agent, especially a listing agent, because if you're not calling on your offers, please do. It helps them get accepted, especially with VA. And then you can educate the agents in this process. So if there's an issue of value, or maybe we have to offer over asking or offer over asking to get concessions or whatever that case may be, educate your agents on this. Say, obviously, I can't guarantee anything, but these are the two processes that you can influence value that no other loan type has. And like, we'll give it our darndest and our best. Now, the RV can take time. It usually takes 5 business days after it gets assigned to someone once you send your support ticket into the VA. I'm not sure what they're taking right now. My VA appraisals have been coming in over asking pretty regularly or over contract price. So I haven't needed to submit one for a couple months. But with the shutdown, that might slow things down a little bit.
I
I
understand
remember.
the VA has not been impacted by the shutdown, that it's very much business as usual.
Yeah.
Mhm.
Yeah, that's what I actually did call the RLC. I had to get an appraiser reassigned the other day, and they said, I was like, well, it's not going to take the full 3 days because like we got our clock ticking here. And he said, well, no, it should be pretty fast. So it's been a day and a half. I haven't gotten it back yet, but
I know when I was doing my first VA loan, I got a phone call from the appraiser, and this is, not too long ago. So I was like really blown away. Wait, why is the appraiser calling me and wants to talk to me about value? And it was really taken aback by the whole thing when it first happened. And I realized, oh wait, with VA you get to talk to the appraiser and you get to pitch why your place is worth this and that, and you get to explain. Well, there were 4 other offers on the table, and we had to go in $3,000 over the other offer, otherwise we weren't getting the house. And they came in at value. It was amazing.
Yep. Now, technically, you're not supposed to discuss value with the appraisers, but you can discuss anything else.
Well, there, Kevin, great.
I don't remember the exact details of the phone call, so I'm not going to leave it at that.
Yeah, I'm sure you didn't I'm sure you did everything right.
Oh, good God, our compliance person. God bless. Anyway, there is a perception out in the marketplace that VA loans are harder, that they are more risky for a seller. And there are a lot of realtors and sellers who do not at all understand the ins and outs of VA loans. So what do you say to those people to help them understand and make them more comfortable with accepting a VA offer?
Sure. Well, if we, I'll only take about an hour and a half of your time to go over that. So if you guys want to stay late now. So, I do a lot of different things. So I do a lot of education in the marketplace. So I teach the NAM CVLS class. I do CE classes for realtors. I do non-CE classes for realtors. I try to do a lot of education on social media. So there's all of that, like general educating the industry, which is so important. And specifically, I have an offer, go to a listing agent. I call the listing agent on the offer and I say, I'm Lauryn Dunn, I'm the VA loan specialist, and I rattle off all the things that might possibly go wrong with the VA loan and I explain why that won't happen. No, I don't do that. I call and ask, do you have any questions or concerns on this VA? Have you done much VA? What's your experience? What's your comfort level, right? And I let them tell me what their objections are, if they have any. And it opens up some really good conversations. And I've developed referral relationships with a lot of those listing agents because of these conversations. But you let them tell them about, okay, maybe there's a property issue, a property condition, NPR, or maybe it's an appraisal issue. Maybe it's can you close on time? I thought VA loans needed 45 days. No. So then I know what to say to go over those specific objections.
Assuming that you're able to get your hands on the certificate of eligibility, how long is it taking in general for a VA loan to close?
My average is like 21 to 25 days. Now, obviously, there's a lot of things that can make that go longer on the buyer or seller side. But correctly setting expectations, not just with timeline, but everything else is really important. So, I know what to look for MPRs, right? So if I see there's a handrail that's needed or there's some peeling paint and we're presenting an offer with the solution, not just with the problem, right? So sometimes the buyer writes into the contract that they're willing to fix minor repairs or minor repairs up to X dollar amount, or they're willing to do termite or whatever. And sometimes it's just like, hey, it's a government loan, like your seller's gonna have to fix this stuff, right? So, and then setting expectations on timeline. So if there is something that's gonna need to be fixed, okay, go fix it before the appraiser comes out. Or this is going to be, this is our close date if everything gets fixed on time. If not, it's going to extend a little bit and nobody freaks out when it happens because you've set those expectations up front.
So in the past, I mean, a long time ago, the seller was responsible for paying all sorts of extra things, and that is no longer the case. How does that look these days? And how are you able to explain that to someone?
Good question. So I will say with the caveat, check your state contracts. I'm not licensed in every state, so in some states it may be different. But as a VA rule, anyone can pay for pest inspection or repairs clearance. Anyone can pay for regular appraisal, septic if you need it, those type of repairs. So it really helps in negotiations. And a lot of sellers, I mean, people get stuck on who has to pay for the $90 pest inspection. Like, give me a break, right? That's, I think, comes from the agents a lot of times. But anyone can pay for that. So I've had buyers write in, okay, again, I'm willing to take care of the Section 1 clearance items or the pest clearance items. So there's all sorts of ways to skin that cat. And just like everything else in an offer, it's all negotiable. Now, some areas aren't going to have pest. VA does not require septic unless it's in the contract or unless your state requires it. Like I know New Jersey requires septic no matter what. So again, there's some certain nuances to keep your eye on when you are helping someone put an offer together. And I work really closely with my agents on timelines, on contingencies, on all sorts of things to make sure that we're all on the same page when structuring the offer.
So I've been in the room in Washington, D.C. when NAM went to talk to VA, and pest inspections came up, and they are very clear that that is something they believe protects the veteran and that they are not going to ever get rid of the pest inspection requirement, which I get on the one hand. The other part of it, though, is if there was no inspection done, so do you just put an inspection contingency into the offer? And how often will a seller, I mean, I know it depends on the market, but if a seller sees that in an offer that doesn't have a pest inspection, what do you do at that point?
Right. So, and that's going to partly depend on your state contracts, right? So like I know our California contracts have spots for that specifically. Most contracts, I think, have a clause in there about if government inspections are required, it defaults to one party or the other. But you can counter any of that out, right? And even if it's not in the contract at all, like it still has to be done on VA. So, I've had it happen where you get less experienced agents who don't realize that. And then partway through the contract, they're like, wait, I have to do a pest inspection? Like, well, who pays for it? Okay, you just negotiate it, figure it out. So, but if it's a multiple offer, like a situation like that, again, that's why you're not just presenting. If you just let the offer go off into the ether and the listing agent looks at it and talk to their sellers, you're leaving a lot up to chance. Who knows what that listing agent's viewpoint on VA loans is? Who knows what the seller's viewpoint is? So that's why making that phone call to the listing agent is so important, because maybe they think that they're going to have to pay for pests, but maybe the buyer's willing to pay for it, right? Now, I'm in multiple markets, but my market in California, it's very common to have all the inspections done before the listing hits the market. And I think that everyone should do that because it makes things so much easier for everybody. So it's a lot easier to negotiate that way. But even in places that aren't, you can usually get a decent idea of what type of shape the house is in, especially with the agent who is worth half their snuff about like recognizing drywall or if the deck is about to collapse or whatnot. So it can get a pretty good idea. And the same thing goes for just the regular appraisal and then minimum property requirements, the MPRs, the peeling paint, the broken windows, the handrails, that type of thing.
I always find it interesting because there's so many agents who think that FHA is harder, VA is harder than conventional. And what I've noticed lately in recent history is that conventional, they're calling out the same health and safety issues,
Yeah.
everything else. So I don't find that there's that much of a difference. Again, the pest inspection could be a variable on VA, but it is something that you can work through and have anyone pay for.
Yep,
So
absolutely. Yeah, and I say the same thing to my agents and clients. If it's a major enough health and safety issue, any loan type's going to call it out, even conventional. If most everything else is pretty minor and can be negotiated and figured out. Now, there's certain exceptions to that. You know, in Ohio, which is my other market, we have some big 2-story giant houses, and it's all wood siding, and the paint is peeling on all of it. I get that that's something that the buyer or the seller might not want to take on to do before closing, right? Because peeling paint is kind of one of those sticking points. But, you know, most of the time it's a $200 2-hour repair to go fix a couple eaves. You know, don't let that blow up your offer. Present it correctly up front, educate the agents, and you'll find that V loans are actually easier when you understand them and know what you're doing. They're the best loan product out there.
I had a condo that was, cement building, and they're like, "Why do you need a pest inspection?" There's no possibility of termite, and I'm like, "Well, there could be some water damage and this," and it turns out that. And then when I explained that part, then like, okay, that makes sense, and they went ahead and had the inspection,
Mm-hmm.
and it was fine. There was no work that was needed.
See, I would have just said, well, then it shouldn't be an issue, right? Let's go
Yeah,
get it.
exactly. Yeah, now I have real quick while we have some time left. Something the rule change that recently, and that a lot of people don't know, is that if you are buying a condo, the old rule was that if the condo association did not had a limit on how many rentals in the association, that you couldn't get a VA loan, and that's no longer the case now, as I understand, for vets. That if you're a veteran and you're using your VA loan, and you're buying into a condo, that the fact that you're a veteran and you can now buy into those buildings because you're not subject to being deployed somewhere at a moment's notice and having to show the rent. Is that correct?
That's correct. It's a little more, slightly more technical than that. So if the HOA does not let you rent out properties or has a cap on how many properties can be rented out, the HOA itself will get declined by the VA. So you
Right.
will have, so you'll look it up on the condo lookup and it'll say rejected. So then the first thing we do as LOs is we call the RLC and we say, why was this rejected? Now, and the reason is it's an active duty protection, right? Which you alluded to. So if you're active duty and you're stationed at, in Colorado, and then you buy a condo and then you get PCS to Louisiana and you have to rent it out because you can't sell it, and whatever, the VA does not want the veteran put in that predicament. They want you to be able to rent it out. So as a just a general rule, that HOA will get declined. However, VA allows for 1-unit waivers on condos, kind of like a spot approval, essentially. So if it's been declined, the HOA as a whole in the last 2 years, you just apply for the waiver because of the right. And the veteran says, again, you have to be a veteran, not active duty. I don't care if I can't rent this house out. I hold the VA harmless. I accept liability, blah, blah, blah. Send it in and you'll get the approval. Okay. Super easy. Again, not for active duty. So don't be afraid to apply for the 1-unit waiver. If it's over 2 years, you just have to resubmit all the HOA condo docs and wait for it to get rejected again, and then apply for the waiver. And there's a few things that the VA doesn't love for condos. If it's maybe if the reserves are incredibly low, or if they're involved in an active lawsuit, things like that can prevent a 1-unit waiver from going through. But the VA uses their common sense and they're very flexible. So most of the time, if you have an HOA that's declined, then you can you can get your approval there. Now, if it's never been reviewed, double check the FHA list, because I want to say if prior to 2007, don't quote me on the date, but I think so. If it was approved with HUD, it's good for VA forever. Prior to 2007, VA doesn't do renewals on their condos, just like FHA does. So check that. But if the HOA has never been reviewed by the VA, that's when you want to do a little more research up front. We can still do the whole thing. We can still do the condo, but without reviewing all the HOA docs, we really don't know what's in there and what's going to be a surprise. So we just make sure we educate our agents correctly on what to expect. Like, hey, we're going to do the full condo review. And by the way, here's a pro tip for marketing. Go around with some agents and go around to HOAs and condo complexes, and without an open escrow, go get them approved with the VA. And now you have a whole complex you can market to veterans in.
Yeah, so I think it's good to note that VA approvals for condos can be very different than FHA or conventional. So don't assume that just because it's on some list for FHA or conventional, it couldn't be approved. And to your point, VA is so common sense. They really just want to help the veteran. And also, just again, I keep saying this, if you have somebody buying into a condo association these days, you really want them to vet that association and make sure that they know what they're getting into. And they might be completely comfortable with whatever the reserve is, the fact that there might be an assessment coming up, that might be fine with them. Just as long as they know going in that that is coming up and that could be an issue, and they don't need conventional, you know what I mean? Just make sure
Right.
you're aware ahead of time. That's all.
Well, and that's extra important on VA because, like I mentioned, they don't do renewals. So this condo complex could have been approved 10 years ago and you're good to go with VA, but who knows what the actual state of the HOA is right now. So, and that's where the agents can really shine about like digging into that and going over those HOA docs with the client to say, here's all the current stuff on it, because who knows what the state of it is today versus 10 years ago.
So we have somebody asking again for the website that you mentioned where you can check VA eligibility.
Web LGY. It's you have to have a login. Your lender has to give you a login for it, which you should absolutely request. And if they refuse you, go to another lender. I'm kind of joking. I'm kind of not. I mean, really, if you're going to be doing VA loans, like you need access to that. Especially if you're going to be, specializing in them. If they won't give you access to that, just make sure you have a processor or somebody that can pull those for you at a moment's notice. Now, we could go into a whole conversation about how you get a COE. 80% of them come back automatically, but about 20% of them don't. And you need to know what the right documents are to ask for, if they're guard, if they're reserve, if they're active duty, if they were activated guard reserve or non-activated. It's how long they served and, all that stuff. There's charts and timetables and stuff that will help you ask the right questions. Because if you ask a guard member who was never activated for their DD-214, you're going to look like an idiot because they never got a DD-214, except for maybe training, and we can't use that. So.
Well, and then I had a situation once with a veteran who was elderly. He was older, and they couldn't find any of his documents. Because it had been in some warehouse, and the warehouse had burned down, and he was just toast. It was really sad.
Yeah, it's really tough. Yeah, you can help them with National Archives on the federal level, and then calling there's numbers and people to call at the state levels for guard units and things like that. But yeah, if they don't have their paperwork, it can be a real challenge.
It was a real challenge, and we ended up having to do an FHA loan.
Oh, darn.
I thought it was interesting to note that Housing Wire published an article today, weirdly, now that I'm looking at the date, saying that U.S. home buyers VA loan usage amongst U.S. home buyers rose to 7.3% in August, which is the highest since 2019.
That's awesome.
So it really does speak to the idea that as the market has cooled a little bit and sellers don't have 1,500 different offers to choose from, they are a little more open and flexible to something like a VA loan. Yeah.
Yeah, I think so. And I mean, I've beat out cash and conventional offers with a VA before. Now, does it happen every time? No, but sometimes it's just how you present that offer. So don't shy away from it, and don't tell your clients to shy away from it, even when the market is hot. But it is nice to see that number increasing.
It is nice. And
there's a Redfin report also that 26% of homes on the market right now are eligible for VA borrowers. It's just,
a lot higher than that.
Can I just copy what you're about to say there, Audrey?
No, but okay, I am shocked. So when we've been doing this show for almost 6 years, 51 weeks a year, right? For an hour. And I don't know that I have ever heard Kevin have a statistic like that.
Oh, Kevin.
God, I'm blown away. Good job.
That's so funny.
Assuming it's real. I mean, I would.
And while I have the floor, actually, real quick, I wanted to just bring up. So both Audery and I have taken the VA certification program through NAM, and I know you're a teacher that teaches that. It's an excellent class, well worth it. I thought I knew a lot about VA when I walked in the door, and I was like, oh my God, there's so much I don't know. That it is well worth every loan officer taking that course. Can you talk a little bit about this
Yep.
course? I know there's one coming up.
Yep. So NAM.org, National Association of Mortgage Brokers, although it's not just brokers now, NAM.org. If there are CVLS, that's a Certified Veteran Lending Specialist. It's a full day class and you take a test and get a certification. It is like drinking out of a fire hose. It's a lot of great guideline information. So get involved with NAM, get involved with your state associations. So, California Association of Mortgage Professionals, Ohio Association, there's one in, I think, almost every state. Get involved and give back and we go to DC and we lobby for positive changes for the VA loan, all sorts of really neat stuff. So if you don't have a class near you, you don't want to fly to one, you can request it. There's information on nam.org to request one. It's a great, great class. I've niched myself VA. I'm 70% VA this year. I'm this close to hitting 30 mils. So, some of you, that's a drop in the bucket. Some of you would love to do it. It's not about the numbers, but what I'm trying to say is that you can niche yourself and you're not going to pigeonhole yourself. You can be very, very successful and get into the doors with many, many other agents that you would normally never have an open door to talk to when you specialize in VA. So don't be afraid of that. And I also want to give a shout out to the Veteran Mortgage Advisor Program. That's who kind of got me started with VA loans. And I think it pairs very well with the NAM class because it's kind of an ongoing. You can recertify through NAM every few years and retake the test. And then the veteranmortgageadvisor.com is some good ongoing, community support for VA loans as well. And I owe a lot to both programs because they really changed my career completely.
Yeah, and the rules change. So it's like when we took the class, the rule about the condo having a no rental policy was strict, and now it's not, and you can get in. And same thing with the 100% financing, no limits. That's something that NAM got through. We pushed and pushed and pushed for that, and got that approved. And other issues like we're working on with the Gold Star spouses.
Yep. And the reverse mortgage for VA. There's some other VA Loan Modernization Act we're trying to get through. NAM was a huge, huge, huge player with the trigger leads bill. So thank NAM for that. They've been for that since 2017, 2018. Yeah. So get involved is a great, and take the CVLS class, retake it every few years. Like I said, know your craft. If you're going to help a veteran, please don't just fumble your way through it. Call me, call one of us, like happy to help and take some training because it's really worth it.
How deep into the funky parts of the guidelines do you get in the classes these days? Do they just do a broader overview, or does it go into some of those guidelines that are slightly more obscure but could easily trip you up?
Well, it's an 8-hour class with about 6 hours of teaching, and we could teach 3 days on it. You can't cover everything. So we do get into some of the minutia. And some of it is you have to, I want to say, be careful on, because you really have to be careful with your lender overlays. Like you can know the VA guidelines for it all day long, but you also have to do the research with your lenders. So, and the VA guidebook is written gray areas and vague on purpose. And it even says in the 26.7 so that underwriters can use their discretion to make a good common sense decision to favor the veteran, right? They don't want to deal with all the minutia. So we can bog ourselves down and talk about, one scenario that could be interpreted several different ways by several different lenders. And it's like, how helpful is that to the class? It might just apply for one person. So I like a lot of engagement in them and to go into some of that, but it is, and I even hate to use the word general because it's general, but it's very specific. Like there's a lot. It's like I said, drinking out of a fire hose. There's a lot that we go into.
And I have to say, the test at the end is
hard.
not a cakewalk. So
it's not
easy.
Really,
really pay attention, take really good notes, and get to know it when you're taking the class. You can't just, okay, I can fake the test. I'm good at test taking. I'll be great. No, you will not pass the test.
No, it's a hard test. And it's, I've had people in my class who've never done a VA loan, and that's a lot harder than someone who has a little bit of background in it. So I'm not saying you should do some VA loans before you take the class. Come take the class, but you may need to take it a couple times. And read through the handbook and familiarize yourself with some guidelines. That can help a lot.
Yeah, that was me when I took the class. I had not done a VA loan before, so it was very challenging.
Yeah.
But I passed on the first shot, but boy, it was by the skin of my teeth.
Hey, that's impressive.
Yeah. I was gonna say he's smarter than he looks, but
Well, and you do get a retest. You get a 30-day retest once if
Yeah.
you don't take it.
I didn't need that. I just
Yeah.
made sure I passed the first one, but yeah, I was sweating bullets.
Yeah, well, I don't want to scare people off too much. So highly recommend the class, and let's get one in your area or close to your area.
Yeah.
we have a number of comments in the chat about the 50-year mortgage, which are varied. And we had even a dissertation by Alan, which I just don't have time to read or comprehend. But the pushback is at least you're getting them into the house. And we did discuss that. If there is no other way, maybe this is valuable. But, again, math, and look at every single option would be a smart way, in my opinion. All right, kids. Well, that was quick.
Should we answer Jenny's question? I know we're a little over time, but just real quick, she asked for VA. Do they recognize in California registered domestic partners as married? So at my lender, you're not required to ask if they have different last names, but we will still request like a statement, or LOE or LOX for you old timers, about their marital status, and then we will need a marriage certificate. So if they have if it's registered and they have the registration paperwork, that's different. But just be a little careful, check with your lender on what their requirements are for that.
Awesome.
Just to be clear, so domestic partners, you may have to document it, but they will accept that as married.
It kind of depends on the lender. So if you can send in the registration for like an actual registered domestic partner, it's not just two people that live together, then that should be accepted. If not, if they have different last names on the application, then the lender can ask. VA says you're not supposed to ask, but the lender can ask for a statement of why they have different last names, and they can request marriage certificates and things like that. Because otherwise, the issue for the lenders is that the VA may not guarantee the loan after the fact if it should have been a joint loan and you don't have a down payment.
So VA accepts domestic partners, but the lenders may not. Is that what
A registered domestic partner? They have the registration paperwork on it. Yeah, not just that they live together.
Got it. No shacking up. They have to be registered and have documentation, legal paperwork, people. So
legal paperwork.
Yeah,
California.
Ask the question up front so you don't end up with a problem down the road.
Yeah.
So there you go. Lauren, it has been, we always know that it's a good guest and a good show when it goes fast. And this was like lightning. So great job. Thank you so much for being
Yeah.
Thanks for having me. I wish we could talk about it longer, but come to a CVLS class and we will.
Well, again, to all the veterans, thank you very much and happy Veterans Day. And we'll see you next week.